Hi, thank you for joining us today. I'm Amos, Chief Business Officer at DigiFT. Today, we are very honored to have Clarence Chan, CEO of BNY Investments Singapore. He brings with him deep expertise across public markets, institutional investing, and asset management. Thank you for joining us, Clarence.
Oh, thanks. Thanks for having me.
I think over the past few months, 12 to 18 months, many of you would have heard and seen announcements around public equities being tokenized, 24/7 tradings on-chain, digital settlements. And many of these are from the largest financial institution globally. But what we want to do today is take a step back to say, let's go behind the scene and look at what's underneath the surface as tokenization moves from experimentation into the operating layer. Now, some of you may be aware, recently we tokenized and actively managed US equity strategy with BNY Investment. We'll come back to that later on in this fireside chat, I promise. But let's start off with a broader conversation, Clarence, in terms of how tokenization is beginning to reshape the operating model of capital markets. I'm sure you've seen multiple waves of financial innovation across your career. What is your view on tokenization?
Yes, I've just certainly seen a wide range of financial innovations over the years, right? If you really think about it, ETFs, for example, fractional trading, robo-advisors, tokenization, right? And all of this would not have happened without advancement in technology.
Right.
And that's probably where we are today on tokenization. Where I see tokenization, the early stages of tokenization basically evolve around having to prove the technology works, that digital ledger technology, DLT, works, how assets can be represented digitally,
right,
and how transactions can be executed on-chain. So that lays the foundation of tokenization, I guess, a very important one, because it shows us what is possible. Where we are today, the focus has shifted. It's a lot more around the practicality of it. And why I say that is the need to integrate how tokenization basically can be integrated into the traditional plumbing.
Right.
Think of it in our custody, clearing, collateral, data, reporting, how all of these can be integrated into the traditional sense. I look at it as both can coexist, and by having both together, then you can basically serve the evolving needs of the financial system.
Right. Now, we obviously have seen the early efforts for tokenization around money market funds and US treasuries. What do you think would be the next asset class or asset structure to be tokenized?
Okay, if we take a step back, money market funds, treasuries, they were the bedrock of the financial system,
right?
The very basis of foundation. So it's very natural that those will be the first one. From a liquidity standpoint, custody, settlement, collateral management, that's a no-brainer. That has to be the most logical asset.
Yeah.
Then from then on, the evolution continues, the journey of tokenization, the whole evolution takes place. And then it comes to the various asset classes. If I draw my previous experience in ETF and using ETF as an analogy, right? When first ETF first came about, ETF didn't become transformational overnight. Next time. The introduction of equity ETF basically brought around global investing, giving investors access, connectivity to the asset class.
Right.
And it was led on thereafter by fixed income ETF, bonds ETF, bringing an OTC product into a public structure, working with the exchanges and so forth. So there is a whole course of evolution. So taking the same mindset, if we look at where the asset class or where tokenization is today, and the same goes for cash. As much as we talk about money market and stable coins and everything and so forth, but if you think about it, we start traditionally physical cash.
Right.
From physical cash to then instant digital payments to where we are stable coins today.
Yep.
And we will continue to see that continue to evolve. So where we see the other stuff from here will be basically different asset classes. We have already seen, I guess, the traditional money market funds, stable coins, private bonds, and so forth. Where we'll see next is funds. Bond funds, equity funds, and those will continue. And those that you guys have just launched, basically that will continue to play down the path.
Right. So I guess picking on what you just mentioned earlier in terms of equities, we have obviously seen a lot of momentum in 2025 around public equity as an asset class. We see it being tokenized as a derivatives. There are companies issuing their shares natively on-chain. What is your view of tokenized equity as an asset class 2026 and going forward?
A lot has been said around tokenized equities, I guess, throughout the course of the last 12, 18 months. I think you look at it as it's a good thing because it brings around basically curiosity, access. And when people start talking about it, basically people get more familiar with it. And then having tokenized equities and that basically largely taking a different structure into the digital as in the form of different wrapper or whatsoever. And there's all the conversation around it. But at the end of the day, if you really think about it, and it's the same in the traditional world, right? You don't manage portfolio on a single stock basis. You don't manage your portfolio based on a handful of stocks.
Right.
It goes back the benefits of having a portfolio still holds.
Exactly.
Right? It doesn't change whether it's on-chain, offline, traditional, and so forth. So in the form of from that standpoint, you will continue to see basically the tokenized equities funds basically playing a more mainstream role in the online world.
Right. And I guess from an institution perspective, how do you think you're thinking about it? Are there concerns about it being a disruption, a cost center versus a revenue center? How are those conversations shaping up?
If you think about it as a disruption or replacement, that's probably the wrong mental note. Right?
I would agree. Yes.
You got to be thinking of it as basically tokenization being part of the whole new ecosystem. It is an optionality, right? It's not here to displace. It's not here to replace. At the end of the day, tokenization is not a rip and replace model. Your traditional rails, your traditional basically still remains largely the same. You tend to think of it as how those two can coexist, whether traditional and basically digital capabilities can coexist. By bringing the two together, enhancing basically what you already have. I like to think of tokenization basically augments what is working, modernize what is not working, or what is may not be deemed as working. And what is working? Basically compliance, custody, market structure. What is probably worth a bit more focus on? Slower settlement, manual processes, and where tokenization helps basically increase the efficiency of all of that. So it's not here to replace, it's probably here to supplement as an option. And you will tend to see as time goes by different models. Institutions can then pick and choose how, in what way and form or format they want to do to basically deliver their best use case.
Right.
It doesn't have to be one or the other, probably more of a mixture of those.
Yeah, I like what you said just now, augment and modernize and providing optionality. I think that's a very valid point here. I guess on the other side of the coin, from an institutional investor's perspective, so we talked about from the institution perspective, from an investor's perspective, in your view, are some of the fundamentals that remain unchanged, tokenized or not?
Tokenization doesn't change a lot of things, right? You don't look at it as it changes. It doesn't change the fundamentals of a lot of things.
Right.
You think of it as basically it's here to help, it's here to supplement, it's here to enhance perhaps. And why is that so? It doesn't matter whether you invest in the traditional fund or the tokenized equity fund. The underlying remains the same. Right? The equity still remains an equity, the strategy still remains a strategy. It doesn't change the way the investment team manage a portfolio. Whether it's the fiduciary duties aspect of it, the governance aspect of it, compliance aspect of it, those doesn't change.
Yeah.
The rigorous process towards delivering an investment strategy and investment outcome, that doesn't change.
Yeah.
The only thing that changes is basically that strategy or that tool, right? Or another thing of it as it's no longer a portfolio, but basically a portfolio tool being distributed, how it's being assessed by a different segment of investors.
Right.
How is it being distributed and how the ownership are being recorded. And these are the things that probably change. But it doesn't changes how the underlying strategy, it doesn't changes the underlying product.
To sum it up, like what would you say are the key unlocks that tokenization can bring?
I guess if I were to look at it from that standpoint, it will largely be accessibility, which is one. How a traditional product that exists, how an equity product or how a fund in the traditional sense that exists in the off-chain world, basically being brought on-chain and give basically institutional or investors on-chain basically more options around their investment needs. It changes basically the ownerships and how ownerships are being recorded on those products. Yeah. But fundamentally, not a lot of changes. The fundamental needs of institutional investors do not change as well. The need for fiduciary duty aspects of it, the governance, and all that remains largely the same. Right. So what you have is basically taking all the goods in the traditional sense and delivering it to a different segment, or hopefully a different segment of investors.
So before we wrap up, we have prepared a series of rapid-fire questions for you. Not to put you on the spot, we think that these are questions that institutions are thinking about, and would be great to get your insight on those.
Sure, bring it on.
Ready? Okay, first question. Which asset classes are most likely to move on-chain next, and why?
You will start to think of it as a lot of the products that you currently have in the public, or I guess in the public markets, in the traditional world, moving on-chains. We have already seen a lot of that happening, right? You have seen basically individual single bonds, single securities. We talk about tokenized equities. Then we have seen bond funds, tokenized equity funds. You'll see more on that moving on-chain. And the reason for that largely goes back down to basically when technology becomes more mature, when regulations become clearer. There's still a lot that needs to be done, and you get that as time goes by, and once with that, you get more of those coming on-chain.
Nice. How far away do you think we are from capital markets going on-chain entirely?
My timing and your timing will be totally different.
5, right? 10
so
years?
I would like to think of it as, if I say 10 years, you guys will probably say 10 months. But I would think a 10 years time frame. And the reason for that, maybe the first 5 years, there's a lot more of clarity, there's a lot more of adoption, and then from then on, the massive scale up.
Right. And so what would you say was the state of adoption today?
We're probably still in the early innings.
And I guess using traditional funds and ETF as a parallel comparison, how different is the space that we are in today?
I guess if you look at it, it doesn't change much from an investment strategy standpoint. It doesn't change much from the underlying philosophy and that. What changes is, I would look at it as maybe firstly a wrapper. Right? ETF is basically a wrapper of a basket of securities. In the on-chain world, similar. But I think what is different is basically all the benefits of tokenization. Right? Be it basically accessibility, basically the ability to embed compliance codings, faster settlement, efficiency, and those will be the difference of that.
Right. And I guess, do you think institutional investors are ready to invest on-chain?
I would tend to say yes, but yes.
So given your experience working with tokenization projects, and especially with DigiFT, what are some of your key takeaways?
I will keep it more general, I guess. When we work with the DeFi players or crypto native players, we always see that there's a big difference in speed.
Right.
And coming from a traditional world, our fast is quite different from your slow.
Right.
And I think that's something that, I guess, as time goes by, as both Web 2 and Web 3 players converge, then there will be a better understanding of what speed means.
Yeah, but I would add that while we move fast, we don't compromise on institutional standards.
Definitely.
Final question. What should investors remember from our chat today?
This is a tough one, huh? Okay.
We're not letting you off easy.
I guess the path of direction is clear, right? I think tokenization is probably here to stay. And how it evolves, I think we can look at it with excitement and see how that evolves. But I think coming back, wearing my investment management hat, right? I will probably say that if you put a bad asset on chain, it's still a bad asset.
Yep,
absolutely. But putting a good asset on chain, basically it brings you a lot of benefits of that better efficiency, smoother operations, and so forth.
No, absolutely. I can't agree more with that. I think tokenization has spent many years proving that it works. I think we are now at an important phase now where it's starting to prove that it actually matters when it comes to portfolio construction on chain, the next generation of capital markets.
I agree.
Now, this has been great. Thank you, Clarence, for your perspective today. Look forward to having you next time. And to everyone who joined us, thank you for tuning in.
Thank you.